Welcome to the Gold Newsletter Podcast, your bank of knowledge of investments, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives to increase your wealth monetarily and educationally.
Hello folks, Fergus Hodgson here. Thanks for tuning in to the Gold Newsletter Podcast. We are exploring the frontier of both gold ownership and the role of digital currencies or cryptocurrencies in this evolution. We have a wonderful guest, Blasi. He's up in New York and he's a 30-year financial veteran. He's the president of Neptune Global, and he is the creator of the patented PMC ounce, which is an aggregated ounce of precious metals. So it's almost like, I'm not sure whether not an ETF, but a similar kind of almost like an index of precious metals, but with physical ownership. And he's been widely published, lots of major outlets, Wall Street Journal, USA Today, and the like. So, and I met Chris at the New Orleans Investment Conference, so I'm really glad we could connect. Welcome to the show.
Thank you, Fergus. Good to see you again. Been some time since the conference, and look forward to catching up with you.
Right on. And mate, one thing you spoke about, this maybe not competition, but this role of cryptocurrencies as an interesting field for the gold bugs. But you said there's a great deal of naivete, and I agree with that. What do you think people both are confused about and simply don't know about cryptocurrencies that are critical or interesting pieces of the puzzle that have gone under the radar?
Sure. This is a huge topic, and, I covered it at my presentation at the conference, but there's a lot of confusion because a lot of people really don't understand the technologies, and, people are just going on buzzwords. And so let's look at two of the most important things. There's blockchain, and then there's digital currency, and people conflate the two. They think the two are the same, and they're not. Blockchain is a technology, right? It's a platform. The cryptocurrencies are using blockchain. And this is, I think, the fundamental that people have to understand. So blockchain is a very robust technology that it's in its early stages. It's got a lot of development to go. It will be around and it will manifest itself in many ways and be much more pervasive in years to come. Now, the cryptocurrencies use blockchain. Now, all because blockchain may be a viable early stage platform and technology doesn't mean all cryptocurrencies are and that they're exempt from their problems. So here's a good analogy, I believe. Think of the internet in the year 2000. The internet is bigger now than it's ever been. But in the year 2000, there were a lot of, at that time, stocks that were going to use the internet as part of their business model. And people automatically said, well, the internet is incredible, so these stocks must be very viable, and they bid those stocks up. Then the tech wreck came.
Just a note on that, you probably are aware that when companies added .com to their names, there was a considerable boost to their value on the stock market. It was really an incredible, a great deal of euphoria at that time.
Absolutely. You remember companies like Pets.com. People would bid up the stock because someone's going to basically run a pet store online with no thought to, is that really feasible? So
can you buy a dog online? Is that really? Yeah, exactly.
Exactly. Ship the parakeet UPS. But we have the same thing. So the underlying internet was obviously not only here to stay, but bigger than ever. But so what we have here is the same thing. You have to disconnect blockchain from cryptocurrency. So all because blockchain is viable doesn't mean, all digital currency is exempt from its issues like any other software. So you have to disconnect the two. I think they're both in their early stages, and there's if you even think about it, using the term currency and then looking at Bitcoin with its huge volatility, well, currencies really don't function that way. And Bitcoin is operating as a speculative investment, not a currency at all.
Actually, I want to double down on that point, that my initial interest in Bitcoin and then obviously the cryptocurrencies that came was as an alternative to central banks or to fiat currencies. And unfortunately, it just seems like that element has sort of gone by the wayside, or it's become a much of much lesser interest to people relative to just speculation. I don't understand that, because the fundamental value, presumably, for these cryptocurrencies is the use as a medium of exchange, which has been often forgotten.
I agree. And, I think a lot of us, all of us, would love the idea, the premise of a stable, honest currency outside the control of central banks. But in order for that to really live up to it, it would have to be something that's stable and liquid. So if you look at someone like us, like a precious metals dealer, I know some, I believe, are claiming that they'll accept Bitcoin, but it's not really, or crypto, it's not really feasible, because you can accept it, and next thing you know, you're selling gold or silver, and the value of this currency you just accepted gets hammered, and you're at a loss. So, you can't run a business that way.
No, my sense is that that's mainly done for marketing purposes to garner attention, and it probably works. And then also, those individuals would then immediately transfer the Bitcoin into another currency, or into gold or some other asset. Sure.
And yeah, it is marketing. And even to do that has a lot of costs. It's just not worth it in reality. So the cryptos are really just a speculative asset. We're watching Bitcoin. It's down considerably from its high. It probably would be down more, because our understanding is there are people who are trying to exit it that are finding it difficult to get out. And, that you haven't established a market bottom until you get an equilibrium between buyers and sellers. So as long as people are having difficulty getting out, that would tell you its bottom has not been reached. So, I'm not saying it's going away for good. It's not. But these are highly speculative assets in their early stages. And they also have a lot of technological headwinds that most people just don't get. Because at the end of the day, it's still software. And all software has trouble, has issues. Look at Bitcoin when it forked, right? It forked because it couldn't scale. And not being able to scale is a typical software problem.
It is. That's one reason why my own view is that Bitcoin, I'm not necessarily thinking it'll go the way of MySpace, but it is going to struggle to compete with the newer cryptocurrencies. And let me give a few bits of data on the situation with both Bitcoin and the altcoins. There are 783 altcoins with market caps of greater than 1 million and 42 greater than 1 billion. There's just such an enormous amount of money tied up in these very speculative altcoins that I'm kind of shocked that anyone would think that many altcoins could last. I mean, I don't know if there are 783 different niches, but it does seem extremely speculative.
That's, to my view, just a classic blind speculation and greed. This is illogical now. And I'll just dial it back to our main focus. When people say, are the cryptocurrencies, is Bitcoin the new gold? It is not. Except for being, gold being perceived as outside the mainstream. That's about as far as it goes as far as a commonality between cryptocurrency and gold. Because gold is really the polar opposite, right? It's truly physical. You can get your hands on it, versus one that exists in cyberspace that is really software that needs periodic upgrades. I mean, really, they couldn't be further from each other, once you get past that initial so-called outside the system. And that's why the cryptocurrencies have taken a little of the thunder away from the precious metals in the last year, just because of their rise. But at the same time, and you're aware as I am, gold and the precious metals just finished its second good year, and 2018 is off to a good start. So we've always made the observation and the belief and the forecast that we're in a long-term secular bull market for gold and the precious metals, and we're in the third leg of that, and the third leg has the biggest and most robust returns. Cryptocurrencies are not.
Right. No, cryptocurrencies are actually very vulnerable right now.
Do you want to rub elbows with the best minds in the precious metals and mining industry? You can on the Money, Metals, and Mining Cruise from May 28th to June 7th, 2018. Explore the jewels of the Mediterranean while discovering the latest strategies to successfully invest in precious metals and mining stocks. It's a perfect blend of adventure, learning, and luxurious leisure aboard the Crystal Serenity, always a popular destination. Cabins will sell out fast. Call cruise experts at 800-797 9519 to learn more or visit our website goldnewsletter.com/cruise.
So, what about the handful, maybe half a dozen or even fewer cryptocurrencies now that actually are pegging themselves to gold? Have you been paying attention to those?
Yeah, I'm aware of it. To me, there's a degree of, they're pegging it in different ways. I really believe that, people talk about turning your gold into a cryptocurrency with gold as the underlying. At the end of the day, I see the counterparty risk, the same risks that you're getting when you securitize gold through other vehicles like ETFs. At the end of the day, why do you want to put something between you and the underlying asset, right? Why would you want to buy a cryptocurrency that is a claim onto gold? Why would you just not buy it yourself directly? It's to me, it's marketing, and it's not really logical. I don't see the benefit.
Yeah, I guess the hope is that the digital gold will be able to be more liquid, perhaps, that you can transfer ownership to someone else. But the bit I don't understand is who is going to pay the storage fees, or is there just the cryptocurrency tied to gold going to devalue by 0.5% every year, or whatever the storage fee may be? I'm not sure.
And that's right. It's like a digital warehouse receipt, right? But at the end of the day, you will have to reduce it by a certain amount for storage. And of course, you may get one that bills itself as there's no charge for storage. If you hear that, you better steer clear of it, because it's just not possible, right? To honestly store bullion at no charge. I understand about the liquidity, thinking that you can digitize it and want to use it as a medium of exchange. But I would look at it this way. In this day and age, if people are willing to accept the fiat currency for items, and I own precious metals and gold as a personal store of wealth, why would I buy it as a store of wealth and start transacting in it, right? It's liquid enough. We're able to we make a market in it 24 hours a day. So I don't know how much more liquidity you'd get. I chalk it up, so why would you take really this foundational store of wealth and want to turn it into something you're going to pay for things with? To me, you want to keep it separated, right? You always want to shield.
Yeah, I plan to have Anthem Blanchard on the show in the coming weeks to explain this more, because he has created one called the Anthem. And his father obviously had a long history in the gold bug or gold legalization movement back in the 70s. But so, why don't you talk about that then? Because I did hear in one of your other interviews that you deal exclusively with physical gold rather than any derivatives or paper gold. How important is that distinction? Because I do fear that people buy paper gold or buy derivatives without realizing that it's basically a fractional reserve banking all over again.
Yeah, I mean, we're very true to all our offerings are only the actual physical, right? So we're not involved in ETFs. We're funds. We believe that there are so few assets that you can truly own and put to the side and put in a storage facility versus buying a securitized claim onto something that, why would you give that benefit up? And I think outside of that, everything else is just about, for the expediency of so-called trading or something, you are taking on risk, right? Even if you're going to, make it a crypto, crypto exchanges get pillaged, right? There was one in Japan just last week. So, you're opening your asset up to risk anytime you're putting it into a form that can be hacked and grabbed and pulled away. So, maybe in the future when the technologies are a little more robust and bulletproof, but, this is kind of early stage. So I think, there's a rush to market because it raises interest and it gets exciting, and I think it's a good marketing, but it's one of those things I believe you need to sit back, let everything kind of mature a little bit before plunging in. So, at this stage, I would definitely believe that the traditional forms of bullion ownership, physical ownership, are advantageous. I mean, we created the product called the PMC ounce, which got a patent. And the reason it got a patent is because of the process and the reporting and the storage at the depository. It bridged the gap of the two worlds. It trades with the ease of an ETF just with a phone call, but it drills down to physical ownership in a depository, in a storage account. So it's not an ETF and not a fund. And I believe that creation was the bridging of the two worlds to bring the benefits of each. And, so that's, and then of course we added the dimension of diversification, by a weighted diversification across the four primary precious metals, gold, silver, platinum, palladium. And, the product is doing tremendously well and continues to outperform, especially on a risk-adjusted basis versus the other precious metals on their own.
Sure. One thing, well, you describe yourself as a market maker, an intermediary, and you just said then that you prefer somewhat of the traditional methods, but obviously we live in a digital age now. How is your role evolving? And if you're not gung-ho to get behind cryptocurrencies, or at least you want to separate them and make sure and put them into a different category, how is gold ownership evolving in a positive way that maybe you or others can take advantage of?
Sure. So we're not, we want to stick to what we're best at, and that's trading and making a market and delivering physical precious metals assets as an investment. So the cryptocurrencies are a different world, and we're not kind of leaping into it just to add it to our platform to attract attention. Again, we think it's an early stage market that's got a lot of challenges ahead, and probably or in the future when it's got on a more firm foundation and more stable, maybe we'll get involved in it. But that's not to say that we're negative toward them, right? We just feel that that's a part of a portfolio that we'll let be served by someone else for our clients. But on the physical precious metal side, that's our space, right? So we're not trying to be a jack of all trades. I don't think as I said before, I don't think the digitized assets or the digital currencies are a substitute for physical precious metals. So I think a client can have both in their portfolio. It's not one versus the other. I do believe one is much more speculative and has much higher risk. There's volatility in the precious metals, but as the advocates of the precious metals have always said, they've never gone to zero. They may be volatile, but they don't go to zero. And as long as you truly have it in a good storage facility and it's in your name, you're in a very good position.
How do people go about knowing those? So you offer an online trading platform, but I mean, what sort of marks or verification tell us that when I take an online platform and I'm supposedly owning a certain share of some precious metals that actually is matched in a vault somewhere equally, that there's not some gaming going on? Sure.
Well, that's a great question. So what we have is a number of checks and balances. So as a client makes a transaction with us, and the transactions are still done online with a trader. A client does get a client online account for reviewing their holdings, confirming what depository it's in, looking at their transaction history, and valuing the account at the current market price. But so at the time of the trade, the client gets a transaction confirmation. There's always more metal moving into the depository. And the important thing is the depository is a non-bank bullion depository, fully insured. It's a major one. It's not a mom and pop. And then the metal goes into a special allocated account for the PMC ounce, and then it goes into the client's name. And the depository then reports directly to the client, not through us, but directly with a confirmation about the receipt of the metals and that they're holding it in the client's name at that point. And anytime there's activity in the account, whether there's more metal going in or some leaves for whatever reason, the depository is going to confirm that. So we're independent of them. They don't have a financial interest in us or us in them. And that serves as a very good check and balance and very unique reporting system.
Understood. So Chris, how should people best follow you? I mean, I know you do all these interviews, but do you have a newsletter, or are you on social media? What's the best way to keep track of you?
Sure. So you can visit our website because we'll post a lot of our more recent interviews on the site. We encourage people to reach out, and either we post obviously our call-in number on our site, or we have a contact page. So anyone who's wishing to get some information, go through the contact and or to email us at info@Neptune Global. And what we'll do usually is the customer service team will send a frequent email with frequently asked questions, so that anyone who's in the exploratory stage or wants to learn more, that kind of covers a lot of it and is a good starting point. So, we encourage people to visit neptuneglobal.com. There's a lot of information on the site. When it comes to the PMC ounce, we have a great tool called the PMC calculator, which lets a person experience a trade. So they see exactly what gets acquired. They see the logic of the allocation between the four metals. And, most people have told us that's been extremely helpful for them to truly digest and understand, what they're trading in.
Excellent, Chris. Thanks so much for your time. And folks, go to goldnewsletter.com/podcast for the archive.
Thank you, Fergus.
Cheers, mate.